AngelBay comes in more like as a initial capital plus initial mentorship slash business development support.
Hello and welcome to Rabbi Rashi Foundation. Angel investing is like planting a seed in a garden of innovation. Our guest today brings a wealth of experience to the table. Sorabh Agarwal is the co-founder at AngelBay. He has over 20 years of experience into financial research and corporate development. Sorabh is an angel investor in 50 startups. And that's wow. आपका बहुत बहुत स्वागत है सौरभ. Okay, to start with, Sorabh, please tell us more about the brand Sorabh Agarwal and your brand AngelBay. Over to you.
There is nothing like a brand Sorabh Agarwal. This is like a simple guy coming from tier two town who just made it into the financial world just because of the opportunities which I got, plus let's say the support of all the colleagues, bosses, and all that. So that just the ecosystem got developed. On the other side, once you look at Angel Pay is something which we started about 3 years back, though we had been working on a concept for almost about 7 years. So 2015, we started investing into startup space personally. And after 4 5 years of doing it on their own, that's the point we thought we will create a name, a entity, and that's where Angel Bay came into being. So currently, AngelBay is a private investor network, about 200 investors spread across 13 countries, mainly corporate executives working in large corporations who want to, one, invest into alternate asset class. Secondly, because they have rich experience, they want to engage with the founders to channelize their knowledge experience into startups for growth. So this has been our case. Last 3 years, we have invested in almost about 60, 70 startups. Combined, we've invested in about 90 odd startups now. And the whole idea is Angel Bay comes in more like as a initial capital plus initial mentorship slash business development support.
That's nice and short and quick. Okay, Saurabh, could you describe your experience with the angel investing? Also, what inspired you to enter this industry?
So regarding the journey into startup world, why I even came into this field is that once I look at my career since 2004, I have been associated with investment banking, private equity side of the business, right? So that's the point you understand there is a different asset class compared to public market equities or debt. And that seems a bit more exciting just because of the ownership factor. So once you're investing into a listed company, though you own shares, but you don't have that sense of ownership. While in a startup world, that's the case. And that's the reason I think it becomes addictive after a point in time. When I look at my journey, how I started, it was initially again, like most of the investors, accident tends to happen. So let's say, while I left my last job, I was looking for something to look at. And that's the point I read this book, Rich Dad Poor Dad. And that had a profound impact because coming from, I would say, upper middle class family, what you feel like is you need to work hard for the rest of your life to earn money, right? But once you read a book which is being read by millions and the guy says you don't really need to work, that just resonates because that's a easy, lazy way of making money. And then the thought process came in case he has put it so simply. And we have got good education, good network. Why don't we try to see if this particular philosophy has got legs? And secondly, can we make it work in our private world? So that was the point where we thought that let's actually start experimenting. So initially, again, we invested in a couple of assets and those did well. So it's again a beginner's luck played a big role into our startup journey because in case those assets would have gone down for some reason, then I think we would have said this is not asset class for us. So again, the stars aligned for us. And once we started investing, it started looking exciting, right? Well, once you start talking to the founders, Founders are 20 years younger to you, they bring in new ideas, and then you realize that you haven't seen even, let's say, 0.1% of the world. Any person you are meeting, they're doing something new. And for the first, I think, 12 months, every idea seemed so exciting that let's invest kind of a thought process was coming in. So that was the early time. And once you start getting into the group and you start seeing that, let's say, year one, you already have done 15 startups, and suddenly, let's say, other startups started approaching. So that kind of probably the approach or the market thing that actually generally made us invest further. And once we started, we just weren't able to stop. And that's the reason we are here today.
Absolutely wonderful, Saurabh. Saurabh, what crucial elements, in your opinion, do you take into account when deciding whether to or not to invest in a startup?
Once we look at the startup, and things changed over a period of time, right? So the way we were evaluating in 2016 was way different than once you have spent about 6, 7 years into the industry. So initially, because everything looked new, every founder seemed good. So it was a lot easier to make a decision, right? And currently, now after 7 years, you see why the startups are failing, what are the issues which are coming in, and that's the point your thesis around the startups change. So currently, while we look at the startups, the first thing for us, foremost thing is how the founders are. So though there are a lot of debates which happen on LinkedIn, Facebook around pedigree and all that, but while you're investing your own money, right, you try to just feel safe in case you get some kind of validation in the market that the person has done something, right? So today, in case I need to go to a surgery, right, I'll try to look at the credentials of the surgeon versus saying that I'll go to a fresh surgeon, right? So once you get probably deeper into the ecosystem, your risk appetite tends to sometimes go down, which happened with us. And hence we have started taking safer bets now. So in case founder is a second time founder or founder, he or she has done pretty good stuff in her or his past life, then I think that becomes a good kind of a probably initial checkpoint. Secondly, then we look at the business idea and the founder's experience. This is not just the founders, it's a complete founding team's experience into that area, right? So in case you are starting a company into, let's say, mobility, right? While you're coming from just pure play fintech or software background, it becomes slightly difficult because again, being in the industry, it becomes a lot easier for us to for the founders to actually get initial connects, initial traction, because once you are fresh, it's very difficult to open doors. But in case you are from the same industry, it becomes a lot easier to sell. The third thing which we generally tend to look at is about the industry and the idea. So whether the industry is a sunshine industry or it's a sunset one, though like in a sunset industry, there are opportunities we will invest, but it becomes slightly difficult and the diligence becomes a lot heavier in that case. And finally comes the idea, because idea is something what we have seen pivots over a period of time, right? So investments what we have done in 2018 or 19, guys may be doing something totally different today, right? But since the founding teams were good, they were able to be agile, move with the changing world and changing tech, and they were able to manage or maneuver their businesses across these things. So these are the kind of criteria we generally look at in terms of while we're evaluating the startups.
Saurabh, this is beautiful. Tell me something. You are an investor, but you as a person, how do you deal with the loss?
Dealing with loss becomes a lot easier once you turn towards spirituality, right? So one of the concepts in a spirituality is you never brought anything into this world. So if you did not bring anything, how can you lose something which you don't even own? So once you look at money or any kind of asset, right, that's given to you for temporary use. Now, one thing I strongly believe in is that we have been very, I would say, privileged or lucky to be born where we were, getting a kind of environment, right? So potentially I could have born into, I don't know, a village in Africa, right? And I might have died by the age of 3. So whatever is currently with me, I would say is like a fluke or kind of luck which was bestowed upon us. So anything which we get is just for our use, right? Whether we use it for 5 years or 20 years doesn't matter. And hence there is nothing like a loss in our life.
Beyond only providing capital and angel investing frequently involves mentoring and consulting with firms as well. Now, could you share some notable situations where your engagement went beyond providing financial services support and had a big impact on the development of a company? Maybe some company, some brand was dying and you wanted to invest and revive it.
So in terms of angel investing, it gives you kicks once you move beyond capital. So capital is part of it. Making money definitely gives you a lot of happiness. But then we could get the same happiness in the stock market, right? The main draw why a lot of us are investing in the startup space is just because we are able to help certain startups grow. And secondly, we have got a lot of experience which has been accumulated over years, right? Now, that experience is waste unless we share it with someone. That comes in the form of mentoring or coaching, right? So it's not we giving back something to someone, it's something like founders are giving us opportunity for to us to use our experience and let's say our skill sets, right? So that's a kind of network which we have built for ourselves, and that's what we believe in. And hence, like mentorship and support goes hand in hand with capital with us, right? Now, I would not say that we changed or transformed any company because that's finally founders tend to do. From our side, since we are investors, we can get involved heavily into the startups, but finally it's the founder who is actually driving everything, right? But there could be a couple of cases where we feel that there might have been some bit of difference we made in the life of founders. So certain cases we have been able to get our business connections in at the early stage, right? And suddenly we see the revenue increase from X to 3x within a year. Now, this is like function of a lot of things. The technology was good, the founder was good. It's just the connection which got opened. But because of that, the founder got the confidence that he can run the company a lot faster than what he was doing before. So this is one place. Secondly, what happens is a lot of founders are lonely at the top, even if it's like a co-founding team with 2 3 founders. Generally, because of the commercial nature among them, it's very difficult to open up and all that. So that's one place few of the founders even call us at 1 a.m. in the morning just because they are feeling very stressed out. Now, we don't add value out there. Okay, we give them experience, we are a sounding board, but someone to speak to you at 12 in the night while you're feeling low, you want to shut down your company, that I would say is like immense help which comes to the point. Thirdly, when you talked about in the previous thing about losses, right? Now, there are two aspects of losses. One thing is the financial loss. Second thing is a human loss. Human loss is more about that currently we have made our money, right? But in case there is an employee in a company who is working at 25, 50,000 rupees salary, right? Now, even if the company is going down, there are cases where we have funded the companies beyond closure just to clear up those dues. But yeah, this is not a practice which we do every day, but there are a couple of cases where these things have been done just so that the closure is not so big.
After hearing this, I personally feel that what a beautiful soul you are. Money is one aspect, but responsibility is a second aspect, which I think not all investors probably understand this. That, while you're investing, you also are responsible for many other things, and this is wonderful. Okay, Saurabh, you just mentioned earlier that, how you got into angel investing couple of years back. And so, what trends and modifications have you seen into the startup ecosystem, the scene, and how have you adjusted to it? And how comfortable and easily you adjust to them? Over to you.
So adjustments sometimes take time. So initially, when we got into the angel investing scene, For the first 2 years, we just invested in two startups. Reason being, we come from a private equity background. There is a set multiple on revenue or EBITDA, which you invest in the company at. Suddenly, you see youngsters coming to you with, let's say, zero revenue, valuing the company at $10 million, right? And it doesn't make sense. So, for first couple of years, we were just completely shocked, surprised with the industry, and it took some bit of time just to get used to the new word what we were seeing, at least a word which was different from our previous word. So over, let's say, from 2015 to 2023, once you enter and you get swayed by a lot of those stories that three co-founders, they met over tea or they are just in their hostel room and they created a mega unicorn, right? So you feel everyone would be able to do that. And so initially we were investing into startups even at the idea stage. But as you grow in the ecosystem, you realize that okay, those are things which happen once in a while, but that's not a norm. That's a something like a rare thing which tends to happen. So over the years, our investing has been a lot more defensive now, so we tend to invest in somewhat, I would say, a senior experienced team. Secondly, we have somewhat stopped investing into ideas. We look at the customer traction. Because what we realized is technology is good or the product is good doesn't mean you can sell it, right? There are so many products in the market where people talk negatively about it, and these products sell very easily because they have a sales team. So now we have started evaluating the business from a business point of view more versus from a startup point of view. So that has been a sea change. And over the years, as with any asset class, because the valuations are now coming down based on, let's say, the recent trends and all that. So the amount of money which you can make in the system is decreasing rapidly. And that has also adjusted our expectations, one, how much money we can make, and the kind of valuations at which we can enter this ecosystem. So a lot of those changes are happening. Now, these things are easily adaptable because once you're in the system, you never know when you actually changed yourself. So once you ask the query, I thought about it, and then the answer came up. I never even thought about this.
What guidance would you offer to budding business, owners, youngsters who are just, looking for angel investors? Most of them are not that experienced. As you rightly said, the products don't sell and they just want investment and then they land up into a lot of trouble.
So, startup is technically a new word, but startups are there in the system for last, I would say, 1,000 years, if not more. And the whole point is that in case you are trying to raise money for your startups, right, there is a circle which tends to happen. Your inner circle is your friends, family, your colleagues who have already seen you, right? If they trust you, they will invest. Professional investors comes in later. So initially, in case you do your homework, take money from your friends and family, make it grow to a certain point, and then showcase it to someone outside that, okay, this is my company, I have done this, let me grow. Now that saves a lot of your time because then you're not scouting in the market, not telling that investors are not seeing my idea or they're not being able to understand my idea, right? Being an investor, it's not my responsibility to understand your idea. You're selling me something, you need to sell the idea to me, right? So that's the difference. What I would say that once you're in the market selling, then sell, whether it's equity or your product.
Okay,
Yeah.
Saurabh, some personal questions for you now. Tell us, what is the success mantra?
So for us, success is like a long-term difference what we make to the society, and in the process, we don't lose money. So for us, it's something like in case you're building, let's build it for, let's say, 7, 10, 15 years. And during the process, in case you do it diligently, money will obviously flow in. Yeah, that's what we go by.
I think you said it the correct way, and speaking between the lines is the best way to put across your success mantra. And this is beautiful, Saurabh. Saurabh, tell us about your achievements in short.
I just caveat this with the fact that whatever I would say I've achieved is not me. It's probably 99% my ecosystem. And obviously, 1% I would have also contributed to that, right? So when I look at from the start, I think the first achievement I would say was that I was born in a good family where I was given good education, where with good education, you just get that confidence that you can do things in life, right? So that was the first thing. And I think I got inculcated initially about the fact that you need to work hard, you need to study hard. Now, that thing really helped me out in terms of being in the top of the class, right? And that just opened a lot of doors for me while I was working or in life. So that was one. The second part was that while I was working now, I got again opportunity to work in my last company called Copal Partners, a bootstrap company which got sold for almost about $600 million in 12 years' time, right? So there I was managing the global operations, which generally I felt that many guys don't get that opportunities to grow. And then I also picked up that opportunity along with, let's say, my colleagues to grow that company. So that was, I think, one big thing where we saw how the companies can run profitably without any external capital. Then again, because of the fact that we are very active in the system, 2020, I was in the Forbes top 10 angel investors in India. And in 21, I was in top 100 Fortune investors in India.
Okay, this is a very valuable episode where we explored investment philosophy and gained valuable advice from many entrepreneurs. Reach out to Sorabh Agarwal in case you're looking for mentorship and stay motivated. Sorabh, आपका बहुत बहुत थैंक्स है कि आप आए.